as well do the dollar Swiss. If you look at this here, when they began to intervene around the 106, right there, and every time they buy it, it actually turns around and it sells off. This move, guys, I mean, maybe they were starting this move has actually cost the Swiss National Bank, the SNB, about $40 billion. $40 billion. So, and of course, when a central bank intervenes, he's not intervening single-handedly. He's asking for support from the other central banks, even though they might not go into the system by actually buying or selling, but they will refrain from doing some action just to support the other central bank. And this is a lesson learned. This is it's a lesson that all central bankers now in the world are kind of digesting now, because that is, with all the intervention, with a $40 billion intervention and support, if you will. I don't know how monetarily support they were supporting the Swiss, but with that they have it has slid to all-time low, and the Swiss National Bank would have been $40 billion richer if they did not intervene, because their intervention has actually done nothing. So if they would have saved their money, they would have been $40 billion richer, and they might use that $40 billion to support their economy by giving some export subsidy or whatever. But to cut a very long story short, yes, we might expect intervention, but this is such a big market. If there is no fundamental changes coming into the US economy and in the Eurozone, however much they intervene, they're just throwing good money after bad. So if we are looking at an intervention, you're looking at a spike unless it gets above one of your serious price structure. So in this case, this is the dollar Swiss. It's an all-time low. It is way down, historical low. So yet, if you look at the Friday close, it's actually a pretty decent close. It's actually a close that would indicate there is some buying might come in. And they closed the week at, it's a neutral to negative sell. I'm looking for continuation to the downside. It closed at 81.86. So what it does, my low here is 81.36. So I will not sell it unless it trades below the 81.56. So that's my short sell is clear. I will look into the intraday chart to find a buy signal. So if I look here at the intraday, this is my 81.36. So this is going to be my short point. And you see, when you do things based on price behavior, you can look at the daily chart and you go back your intraday and you find that the software identifies for you the same price point. So you have now that confidence in the signal. You understand what 81.36 means. So this is going to be our short, and if I short it over here, I'm going to put my stop above 81.51. And for us to buy it, this is pretty much noise. I mean, if you look at this, going up and down, going where to nothing. So rather than getting whipsawed, I would rather buy it above, even though it's 70 pips away. You guys with the software, you might kind of identify an early entry but for the guys that just joining us for the trade planning session, I would suggest buying it above the 82.55. So we'll buy the Swiss franc above 82.55, and if we do buy it above the 82.55, my structural point is the 82.74. That's my structural long. And if I buy it above 82.55, I have to put my stop here below the 81.93, below this point. I will go short below 81.36, and if I do, I'm placing my stop above 81.51, and my structural short is still the 80.80 below the lowest point. So this is the dollar Swiss. I'm going to go long above 82.55, and if I do, I have a structural point above that, which is 82.74. And if I do go long at 82.55, my stop is 81.93, so I'm risking about 60 pips on this trade because it's a big move. And on the short side, I'm going short below 81.36, and if I do, I'm placing my stop above 81.51, so I'm only risking 20 pips on that trade, and my structural short is the 80.80 to the downside. Okay, that is the dollar Swiss.